In this month's economic update, Kaplan Professional Education's Trevor Treharne speaks to an industry economist about the short-term domestic and global economic outlook.
Welcome to Kaplan Professional Education's monthly economic update. I'm Trevor Treharne, and this month we're joined by RBC Capital Market's Head of Economics and Fixed Income Strategy, Su-Lin Ong. Thanks for joining us today, Su-Lin.
Pleasure.
Australia's unemployment rate jumped to 5.6% in March from 5.4% in February, its highest level in more than 3 years. What is causing this, and can we expect this rate to rise or fall through the rest of the year?
I think there's several factors when we look at the labour market. It's true, the unemployment rate did rise in the month of March. It's broken out of what's been quite a well-established range, 5 to 5.5% for the best part of almost the last 2 years. But what we're seeing really, we think, is a fairly soft labour market that's quite consistent with the sub-trend pace of activity. Notwithstanding from the month-to-month volatility in the headline employment numbers, trend employment growth is only about 12 to 15,000 per month. Now that's not enough to keep the unemployment rate steady, and when you combine that with the rise in the numbers of unemployment persons, that's actually what's causing this unemployment rate to edge a little higher. Now, by historic standards it's still fairly modest, by international standards it is as well, but I guess our concern is that the raft of labour market data is quite mixed. The leading indicators as well are also fairly mixed, and when you look at what we think is an economy that will continue to grow at a sub-trend pace for much of this year, the odds favour a higher unemployment rate by year end. So we're looking for the unemployment rate to move up to about 5.75% by mid-year, stay around that level for much of the second half of the year, and not really show much of an improvement until 2014.
How will Cyprus, becoming the latest European nation to require a bailout, impact the rest of the region's stability?
I guess the Cyprus bailout is an interesting development. I think it provides a bit of a reminder that despite some stability in Europe and some improvement, I think, in confidence and sentiment and an expanded toolkit from the policymakers, that there's still quite a lot of challenges, and Cyprus, I think, very much falls into that category. What's unique and interesting about the Cyprus bailout is how the package has been structured, and one of the key, I guess, factors is that rather than a bailout, it's actually a bail-in. It actually requires the creditors to contribute to the package, and that's a little bit unique, and in particular the burden that's fallen upon deposits. And so what we've had as part of this package is depositors having to take what we call a haircut, so not getting their full deposits back. The size is yet to be fully determined, but it's likely to be at least 40% for deposits above €100,000, potentially higher than that. So it's quite a significant development. We haven't seen this before in any of the other packages that have been structured in Europe, and I think it represents a little bit of a shift in thinking from the policymakers and what they require. So I think after several years of packages from the for Ireland and Greece and several other countries which have largely come from external funds, there's now a requirement for the creditors to contribute.
Chinese economic data for March unveiled stronger than expected imports, auto sales, lending and money supply growth, while inflation fell back to 2.1% from 3.2% in February. What does this tell us about China and the rest of Asia in terms of growth momentum?
The Chinese story, I think, is quite a complicated one at the moment. We've had, I guess, more recently Q1 GDP data that's just been released, was softer than expected. Growth momentum actually looks to have waned a little in early 2013, with annual growth coming in around 7.7%. So below this kind of 8% mark that a lot of us were looking for. When you look at the composition of growth, it's not too bad. We're getting a little bit of a shift away from this over-reliance on investment and a little bit more household consumption, and that's a good thing in the long run. But nevertheless, I don't think it detracts from the fact that China and the momentum in growth is disappointing thus far in early 2013. I think for the region as a whole, obviously China is incredibly important, and especially for Australia, given the commodity linkages and the trade ties. But I guess we shouldn't overlook Japan. And what we've seen there recently, the quantitative easing program that the Bank of Japan has announced announced the doubling of their balance sheet and a very clear and bold, quite bold policy action, in part we think designed to push their currency lower and boost competitiveness. I think that will go some way in hopefully lifting Japan onto a stronger footing, given that it's had 2 decades of near stagnant growth. So the China story, I think, is a complicated one. Growth is more moderate, but look, it's not that far from what the policymakers want anyway, and it's probably worth keeping an eye on the other big economy in the region, which is Japan.
There are indications of another spring slowdown in the US economy, with the top concerns for small business owners remaining taxes, regulation and poor sales. What impact does this low level of confidence and performance from small businesses have on the wider US economy?
It's a good question. I mean, there's no doubt that the data, recent data in the US has erred on the disappointing side. Most of the activity indicators suggest some loss of momentum late Q1 and more so in Q2. Now, there's a number of factors explaining that, in particular the sequester, or what has been automatic spending cuts, government spending cuts, which began 1 March, definitely we think has had an impact on business confidence from small right through to big, hiring plans and intentions, and definitely cutbacks in terms of actual government expenditure. So we think there are some reasons for that, as well as some higher fuel prices earlier in the year. So there's definitely a bit of a soft patch going on in the US right now. I think small businesses, which are the engine of growth, are feeling it in particular, and a lot of it has been around the budgetary impact and these cuts to expenditure from the government.
Thanks for joining us today, Su-Lin.
Welcome.
That brings us to the end of the May PD sessions. Thanks for watching. If you have any feedback or questions, please drop us a line at pdcontent@kaplan.edu.au. I'm Ron Wilson. I'll see you again next time.